Between 2011, 10, 11 and all the way to 16, you managed to massively outperform the sector. In fact, you've grown 10, 11% when the tire space was growing 4.5%. How did you manage to do that?
You know, Apollo has always been a aggressive company and looking at newer geographies. We started our first acquisition in 2006. That was the first time an Indian tire company stepped out of India. Taught us a lot in South Africa. In 2009, that was the key milestone when we acquired Vredestein in the Netherlands. So Vredestein gave us that leap jump, and then we never looked back. We've been increasing Vredestein in the factory in Holland. When we took over, we were making 5 million tires per year. Today, we are making close to 7 million tires per year. And on the back of that confidence that we had at the dealer network and the distribution network, we had to create another factory. So as you know, recently in April 2017, we've just started our production in Hungary outside of Budapest, where we'll be creating 16,000 passenger car tires and around 2,000 truck tires per day. This is a per day capacity. And so you can see that slowly Apollo has entered into Europe. Today we had around a 2.6-2.7% market share in Europe, which is not bad, and we are growing here at around 8 to 9%. This is only aftermarket. Recently, a year ago, we've started an OEM engineering department in outside Frankfurt, given that all the OEMs are in and around Frankfurt. So the company has always been an aftermarket, and now our focus is moving towards the OEMs in Europe. We're getting very good positive feedback from most of the OEMs, the top OEMs. I wouldn't like to name them right now. But you'll see by the end of this year, getting into next year, we'll be getting into the top OEMs in Europe. One thing on India, you know, we are a company, like I mentioned, aggressive. We looked into the future in 2008 when the world was in a recession. The board was very confident of our strategy going forward, and we saw truck radials. India has always been a truck bias market on the old technology, and we saw truck radials coming in a big way. And that's the time that the board took a decision to invest close to 3,000 crores in December of 2008 in a plant in Chennai. That was, I think, the best timing for the investment because we got a lead over all competitors in India by nearly 18 months. And today, our truck radials market share are by far the leaders in India with a 28-29% market share. So that 18 months lead and the headwind that we got is still with us, and we are again expanding our capacity from 6,000 truck tires per day in India to 12,000 truck tires per day.
Some of your competitors say that domestic conditions remain subdued. As a blended volume outlook, if one were to ask you, what kind of color can you share with us?
Well, I'm positive. Yes, quarter one was bad in terms of volume. Not on the passenger car side in India. Passenger car side was 1 to 2% increase, but truck was, for some competitors, it was negative. For us, it was flat. And why? Because of the various changes that have come into the economy in India. One was the emission norm for the trucks, and then the second thing was GST that came up. Third thing was demonetization that came up. So it did upset the apple cart. But in Q2, I'm seeing positive trend, and I'm very hopeful of a double-digit growth on volumes in Q2 and going forward. And I can't talk about competition, I can talk about us. Given that we have a leadership position in commercial vehicles, I'm seeing commercial vehicles coming back in a big way. Also, the OE side of passenger car is booming. Again, I'm seeing a high single to double-digit growth coming in passenger car. So I'm pretty bullish on volume growth in Q2. But as far as profitability is concerned, we're still under margin pressure. Right. We've not been able to correct our prices. Raw materials are high, while everyone is saying rubber has come down and oil prices have come down, but it's not come down to levels where they were last year. And so margins are still under pressure and will continue to remain under pressure as we go along.
When you're managing a company across countries at that level, do you really think margins, what are the levers other than raw material which are available for you
Well,
to press, if not immediately in the next quarter, but over a 2-3 quarter level? What are the other levers available?
Well, I think rubber is one of the key components. Not only rubber, but oil prices also.
Okay.
So if you see, 65% of our cost is raw material based. So that leaves us with a margin of 30 to 35% to play with. If I cut that down, personnel cost of India is around 6 to 7%. Then comes manufacturing costs and other overheads. So obviously Apollo is looking inward and seeing how we can cut costs in both in terms of manufacturing, increasing productivity. I'm happy to say all our plants today are running at full capacity. When the plants run at full capacity, productivity increases and thereby costs come down. And therefore, if a company like ours who are investing back into the organization, back into technology upgradation, to give you an example, our R&D expenditure today is at around 2.2% of sales. 2 years ago, it was below 1%. And we consciously took a decision that we are going to be spending much more time and money in R&D and upgrading our technology products. At the same time, we are trying to up the marketing efforts of our brands.
So, our homegrown companies like yours have been under significant pressure last couple of months and quarters due to dumping of Chinese products into our country, which to a certain extent has been taken care of now. How big a relief is it?
The news is out, but the Ministry of Finance still has to give the final verdict, and we are still waiting for that. We ourselves have a huge domestic consumption, and we ourselves have put in huge investments into the country, giving large employment. And if imports are coming in from China, which are 50% of our selling prices or even cost prices in some cases, then clearly you will have unemployment. Factories will have to shut down because some people won't be able to survive. And I can see that in our tire industry also. When the Chinese had come in, and they are still in, there are competitive tire makers who are now at maybe 60% utilization, 70% utilization of the factories. That goes to show that there is going to be let down of jobs, layoff of jobs happening, and that's not a good sign for India as a whole.
If one were to point out 3-4 big things on the mind of the management right now, in terms of priorities, what would be a couple of things?
Sure. So I think my top priority for the management or for all of us is to see how soon we can ramp up our Hungary factory. As you know, there's an investment of nearly 500 million euros gone. We want to see that we are able to ramp up and come out in flying colors as soon as possible. Generally, it takes 12 to 18 months for ramp-ups to happen and for feasibility, viability to start off. But I'm targeting that within 12 months we are able to come up with the entire production, and then obviously sell that production. So my second priority is where we have invested another 2,500 crores in Chennai to up the production from 6,000 to 12,000 truck radials per day. That in itself is a challenge. That is going to be one of India's largest plant, but Southeast Asia's also largest plant, because 12,000 truck tires coming out of one plant is huge capacity. It'll be close to 1,000 tons per day coming out of that plant. So that becomes a second priority. And really the main out of all of these things is margin.
Sure.
And all our aim, our focus within internally and externally is to see how we can reduce costs internally, how we can correct prices wherever we can, and increase margins, because margins, as I said, are under pressure.
Right. So my last question to you would be in line with the theme we at ET Now are progressing with, which is called Rise with India. In that light, where do you see what stage of the cycle is the company right now in? And if slightly longer term picture you could paint for us, where is the company heading?
Sure. So, firstly, I think it's the management, it's the board leadership that has got us here. We've always looked at various environments and then taken strategic decisions as we move forward. From here on, Ajay, what we've done is we've planted marketing and sales, I would say seeds, flower seeds in various countries. We've started an office in Dubai, in Thailand. These are sales and marketing core offices, hiring locally 30-40 people. one in Australia, and one in South America, and one in North America. Now these are 5-6 offices which are opened up, and their purpose is to see how soon they can pick up sales. As soon as one territory comes up to a level of 100 million turnover, then in our business we need a sourcing facility close to that. So I think what we are trying to do now is de-risk ourselves. Whether it's India, whether it's Europe, we need to expand our geography. We need to expand where we sell our tires and expand our brand pool. That's what I think you will see in the next 5 years, where Apollo is headed towards.
Right. Thank you very much for your time, Mr. Kanwar. It was wonderful chatting with you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.